Welcome back. You are watching Metropole Television. My name is Simba Elijah Charles Kiage. Welcome to your official economic review this morning. Let me take time to introduce the gentlemen who are joining us for the next couple minutes. We're joined by Justin Mwangi, who is an investment analyst. Justin, good morning, sir.
Thank you very much for having me.
Welcome to Metropole Television. We are joined also by Robert Ochieng, who's the CEO Abujani Investments. Robert, good morning, sir.
Good morning, Siva, and thank you very much for having me on board.
Anytime. We are also expecting to be joined by Gabriel Mwendwa, who's an investment associate. All right, let's get into the first story. Now, a mix of a rise in investment income and a jump in the value of shares are traded at the Nairobi Securities Exchange, NSE, has pushed Britam Holdings' half-year profit to 376.3 million in 6 months to June, representing a turnaround from the 1.63 billion net loss posted in a similar period last year. Now, Britam's revenue from core business of underwriting increased 2.4% to 11.97 billion, with investment income rising 35% to 1.29 billion to 1.29 billion, yes, to 4.96 billion, offering the majority contribution to the bottom line. For the insurer, investment in equities at the NSE posted a 1.37 billion gain in the 6 months to June, compared to a loss of 3.22 billion shillings booked in preceding similar period last year. Britam, however, noted that their earnings were impacted by a 3.78 billion shillings rise in operating expenses, which was a factor of increased claims payments, interest payments, and restructuring costs. This morning, let's take a look at that data from Britam this morning, and you will say, let's track where they have been in terms of that loss and profitability trend. And we're going to, we can track it all the way, and we're looking at it in terms of millions then, because in 2017, that's when they had 527 million. They dropped back to a 2 billion loss in 2018, jumped back to 3 billion in 2019, and 2020 was their worst, in fact, for majority of the insurance companies in the country, because that's when they recorded that 9 billion loss. And now 2021, for the first 6 months of 2021, let's jump into that data set as well this morning and look at those key performance indicators. There's that turning around, and you can see exactly how that total income has jumped. Profit before tax, 647 million. And if you factor in profit after tax, then they come back to 376.3 million. Let me start with you, Robert. When you look at the way Britam has performed in the first 6 months of 2021, how would you summarize that performance?
Yeah, so I think for Britam, I would say that it is very encouraging given the first year. And generally, if you look at the insurance sector, since 2014, for investors at the NSE, it has not been a very, very rosy ride, because the share prices for insurance companies have remained muted. You remember Britam reached a high of 40 back in 2014. So we have people who bought at 20, at 30. So it has been very, very tough for them, and even the business environment has not favored them. Then going back to 2020, we know that Britam has got a significant stake in Equity Bank stock. So at the beginning of 2020, Equity Bank stock, I think it was trading at around 50 something. Then it closed the year at around 36. So when now you look at 2021, from that 36 to 54, it's slightly close to 50%.
Yes.
So those are now the gains from the investment fair value that we are seeing. And we also see that the real estate sector continue to be under pressure in the short term. So obviously that has affected them due to the exposure that they have in the sector.
Yes.
And that said, on the expenses side, we can see that they did some restructuring, which we expect to see the benefits now from 2021 going forward. And the restructuring will help them with the operations, because they are to let go of some people just to ensure that they streamline their process. So I expect expenses to also be in a good position going forward. But of course, in the insurance sector, we've seen that claims, that element remains quite unpredictable. So maybe they're working on some strategies to work on that. But that said, I think it is a very good improvement going forward. And looking also at their book value per share, I think they're in a very good position for people who are looking at value. And of course, they'll have to spend more time as investors looking at the company. Since insurance companies, they're not very straightforward in terms of analysis. But it looks good, yeah.
I'll be coming back to you, Robert, because there are a lot of announcements that Britam has already made. I'm going to look at exactly what has been behind their share price rally. That's fine. Let's cross over to Justin this morning. Justin, how would you also, looking at the way that Britam has performed in the first 6 months of 2021, but then again, when we look at the overall insurance industry, it's not that majority of them are looking up, Justin. It's just a single ones of them are the ones that are finding ways to actually turn into profitable margins. Case in point, Britam is saying that majority of their income now has come from their investments rather than their core business of insurance underwriting. Would you look at that and then say, I mean, your core business is not really taking, so your performance again would not be what we would say stellar in that sense, despite that turnaround?
I agree, Simba. You see, I think it is a symptom of the underlying problems for the insurance industry. Yes. Because if you look at even the other big insurance firms, let's say Jubilee, you find that they have really performed well in their first year. It's due to the investment income performance. So it's an underlying symptom of the industry-wide problem, which is we have a low insurance penetration in the country. We have, as Robert said, very unpredictable claims, whereby some years it seems like it's stable or they're managing to minimize the underwriting losses, while the next year we are seeing that all of a sudden there's a spike. At the same time, despite the fluctuations in the claims, the revenue that comes from their premiums remains more or less stagnant. They grow basically, yes, but at a very small rate, and this is only an indication of the growth of maybe the economy. So it's more or less saying the same number of people, more or less, so every year in, year out, are taking up insurance, and we're not seeing that increase from, let's say, the 2-3% that is quoted as the penetration rate in Kenya increasing. As long as that challenge exists, we will not see the core businesses of these insurance companies coming out and being the stronger sources of income for these big firms like Britam.
Yes.
Yeah.
All right, fantastic. Now, Robert, let's then get into that conversation, because if you look, let's analyze exactly what has been that in terms of the value of shares that have been traded at the Nairobi Securities Exchange. If you look at that, Britam is saying that what has been behind some of the income trend that we're talking about this morning is because of income that is rising from their share price rally. Robert, somebody who's looking at the local bulls right now, would you go into the insurance talks, or would you rather avoid them now and probably go into the banking stocks? Which is why we're asking this question: why has Britam found a way on the local bulls in terms of that rallying, in terms of their share price trend?
So basically, Simba, what I look at is basically building a diversified portfolio.
Yes.
And at the NSE, maybe the strongest sector, of course, is the telecommunication sector, and that is backed by data from CBK and Communications Authority, then followed by the banking sector. So unfortunately, for the financial services sector, they're just too sensitive to uncertainties. So for that reason, the likes of Centum, banking stocks and insurance, year like 2020 is not one of the best years for them. So there are two volatile, but telecommunication that is stable in terms of that. I got the rate you might not be able to go, but still because that first thing. So you have to build portfolio. I think the insurance sector is key in Kenya. So look at some of the best companies, and like you mentioned, not all companies in the insurance sector. So out of the companies, I think mainly is Britam, Liberty Holding, and Jubilee that are able, and some are still undergoing some issues. Some of them you can choose and see the valuations and business that they have. So if you ask me, I'm not such a team on companies and even insurance companies. I'm seeing that it's not only something that is investment company. Even Jubilee is like EB, Britam the same. So you should be able to analyze and the investments that they're making, because unfortunately investments, when you look at it from accounting point of view, accounting looks at investments as expenses. So you take my staff for training, accounting will say you spent money on stuff, but in this investment you need this stuff to do very well. So I think we have to look at it that way. Because there's a big opportunity going forward, and given the momentum that we see in other sectors, the banking stocks are growing, it means that economic activity is increasing. So the only concern would be on the claims, as Justin has said. I think as a sector, we need to work out on that, because I'm seeing that even there are some fintech companies that are trying to get into the sector, but underlying problem are so there are things, when you look at the financial sector as a whole, a lot of pressure in mobile loans, but these products where you have to push people to do like savings, investments at retail level, people are not really keen. And now insurance, there is a low priority product from a personal finance point of view. Yes, we need it, but most of the time people live for something to happen, like a funeral, for them to realize that they need. So because there's need for a lot of campaign, to good opinions, but managing risk is also key. From my investment point of view, I think well placed, because from the real estate sector, we've taken some impairments, so going on there will be some.
Pretty much. All right, now, Justin, let's also now look at the last issue this morning, especially when we put this result for Britam into proper context. I mean, they're saying they noted that their earnings were impacted by a 3.78 billion shillings rise in operating expenses, which was a factor of increased claims payments, interest payments, and restructuring costs. Now, the biggest announcement again, what we do know under that exposure as well, is that Britam have actually announced that they are planning to sell their 48.2% share or stake in HF, which is a real estate a firm that also sort of increases their exposure in this market. So, Justin, when you put those two announcements together and then take this result that we have now for Britam into proper context, would you then say that should that happen, then this is a company that will turn profitable in 2021?
Yes, for sure. I will just reiterate those statements that when you look at these insurance firms, especially the larger ones, they are more of holding firms as they are, because their core business is not really giving them the kind of margins that they are looking for, the margins you would expect from a firm of its size and its number of locations, geographically speaking. So when they make investments, and some of them are maybe aggressive in the past in banking stocks, it was only as a calculated measure. The Equity Bank stock is performing quite well. The HF Group, I don't think them moving out of the HF Group right now is the best for the strategy, given the amount of cash they put in last year, the 1 billion, to boost it. And we're also seeing the banking sector improving, especially most of the other banks, like HF is still struggling, still in the red. But it may be more better for them to just wait it out in the short term as a banking sector continues to improve, as the economy continues to improve. Now, if you look at now the operating expenses, as you mentioned, which was a huge factor and a cause for concern, the 25% rise. This was mainly due to, yes, we had claims increasing, we had restructuring costs, However, these are things, restructuring costs is temporary. It's only this time that they had to do a major restructuring. Severance costs, we had also changing the leadership at the board level. So the main thing there to look at is the impairment that they made, the payment of 5.2 billion shillings last year. This is not something that the firm is expected to do every year. And why? Because the investment market is not expected to be under such pressure every year that they have to keep doing that. And we have seen this even in the market stocks, where they're reducing loan loss provisions. The same case for Britain. We expect that this impairment that they made was there as a precautionary measure. As an investor in the stock, I will even look to it as a good thing because they are covering their bases. They're ensuring that there is no possibility that they will not be able to meet any obligations. Things that can heavily change the investor sentiment, positive, negative ones. There are stories that they cannot give the returns they are promised, or they cannot pay out the obligations. Only to cover their bases. Don't expect an increase of that of the impairment that they're making. I think total now it's about 10 billion. I'll have to confirm that figure. I don't expect them to keep making that impairment every year. Going forward, as the investment markets improve and start even maybe plateauing in the next half year or 1 year, we expect that it will remain in the green as we have seen in the past. In fact, apart from last year, 2019 it was profitable, 2018 it was profitable. So these are the performances that we expect, at least in our view, that as the economy recovers, as people gain more disposable income due to businesses ticking up, and even businesses such as maybe the tourism sector and hospitality coming back or regaining where they were, then the demand of some of the insurances that they offer will also start to increase more and more. So expect the performance to continue being in the green. We expect the performance, especially in the profit level, to increase in the future, albeit not at the huge percentage or the fast rate that it had H1 or this year 2021 compared to last year.
Fantastic. All right, now, gentlemen, I want us to take a short break, but once we come back, there's something very interesting happening on the local booze. Just before we step out, the WPP Scan Group full year results came in, and they gave us that at 1.73 billion in terms of their losses. But then something interesting is going on. At the same time, when they were giving us those results on Tuesday, I mean, in terms of rolling on the NSE, they were top 3 movers. In fact, knocking off bigger boys like Equity and Cooperative to trade more than 1 million shares. You would think that will stop. No, it did not stop. Yesterday, they closed the market again among the top 5 movers with more than 1 million shares traded, despite Deloitte, who were an independent audit firm, saying there were some key areas that were not included in that result by the company, which are in contravention of IFRS. Question is, why are we trading WPP Scan Group shares despite that loss and that announcement by Deloitte? Once we come back here on a Metropole Television.